Good morning, everyone, and welcome to Morning Market Movers, where we do live analysis for day trading and take a look at hotspots in the markets for today, Friday, June 3rd. My name is Todd Rich. I am with Nadex. With me, as always, the CEO of Keep Trading Simple, Brian Caprice. Well, what are we looking at today? One, we are going to be looking at energy. Energy is very volatile. We're seeing movement in oil. We're seeing movement in natural gas. So certainly taking a look at the charts there is going to be important. Uh, it's been a bit of a crazy week, particularly with the news coming out of OPEC Plus. Markets thought, hey, look at this. We're going to get some relief and we're going to see some additional supply. But the markets are saying it's simply not enough. Had some parabolic moves this week. So we'll definitely be taking a look at oil. We'll definitely be taking a look at nat gas, which is on the move again this morning. The other thing we're going to be looking at is equities. We did just get our non-farm payroll numbers, and we did get the unemployment rate. And then you mix that in with conflicting news, which Brian and I mentioned yesterday. We're seeing it in the tech sector. More people were hired. This is great. Okay, so people are getting hired. But at the same time, we're getting from in the tech sector, we are getting Tesla just put it out. They're going to have to reduce their workforce by 10%. Again, in the technology sector, that grow at any cost is starting to shift. So in the tech sector, where they were just throwing tons and tons of money at it, you're seeing the tech companies starting to pare back. And in fact, even with the strong dollar, we're seeing companies that do business internationally, like Microsoft yesterday, had to adjust their earnings going forward because more than half of their revenues are coming in from overseas. That strong dollar impacting their revenues. So lots of different things moving, changes in the economy, changes in the globe, impacting corporate earnings, moving markets. We're seeing some volatility. Before we jump over and have Brian get into those charts on energy and equities, I do need to share and the headline news, particularly around the non-farm payroll and the unemployment rate. I do need to share this disclaimer that trading involves risk. It may not be appropriate for everyone, that any trading decisions you make are solely your responsibility and at your own risk. And this is an educational session. Please do not construe anything Brian or I say as a buy or sell recommendation. We are doing this for your education purposes. So, Brian, I'm going to flip it over to you and let's take a look at some of the headline news around the employment and then get
Yep.
into those charts.
Yeah, it's definitely I would say it's very interesting numbers today. Employment change numbers were kind of that double. There was an upward revision last time. Originally, it came in at 421, so a little bit more. Not it wasn't like 150,000 extra jobs that they magically found. But a lot of times when you see that upward adjustment, you would expect this month to be lower, and it actually came in higher as well. So again, that's positive. Remember, this is one of the things that they are talking about, that there's 11.4 million jobs, but only 5 million people looking for jobs. This is a great number as far as that's concerned. It doesn't eat up the $5 million, the 5 million job difference, and that was what they really needed to get rid of. But on the flip side, there is some concerning data. The unemployment rate, as we mentioned yesterday, if it didn't come down, that was going to be a problem, and it didn't. Again, it stayed where it was, so the market had kind of factored that in. And then the average hourly earnings. This is what the economists are going to look at the most right now.
Yep.
Remember, right now we know, again, that's why I was reading this story right here. Hello, Jim. Messaging that right now, year over year, 5.2% is basically where we're at with wage growth. Wage growth is great. Again, that's leading to, kind of higher inflation levels and things. The problem with the 5.2 and it being on track with expectations is the fact that right now our year over year is 8.3. So we're actually losing.
Yeah,
we're actually losing 3% of our money by just sitting there doing nothing with it. So unfortunately, that's the hard part. We know a lot of it is centered in energy, and everybody likes to point the fingers. It's this person, that person, this person, this person, this person. But even if you remove energy, even if you remove energy, it is still higher across the board in all items in food and other items. It's still higher than again, and we haven't even, I don't think, seen the worst of it yet. Because remember, a lot of this is again, people will point to this as, again, it's natural gas, but oil.
That's clearly an outlier, but you see everything else is still up. Food and I mean, everything is up.
Yeah. And the worst part about this is, and again, remember, summer is always where typically transportation costs are the highest. we haven't quite seen the full kind of brunt of this getting passed down. And why this I think is important. And again, something that right now, if I had to look at this, and again, I don't even have the market chart up, but just looking at purely the data, sometimes we'll look at things purely on a technical basis, purely on a fundamental basis. This is kind of leading to a red-based day today because, again, we know that inflation on a month-over-month basis is not keeping up. We're still seeing inflation continue to go. Average earnings are not paying people more, even though people are getting hired. And again, the unemployment rate is not coming down. So people are not coming back as fast. And then we had the news from Elon last night saying that they want to cut 10% of the Tesla workforce because he sees kind of some negative clouds coming. And then again, on top of that, we had Jamie Dimon saying, brace for yourself for an economic hurricane caused by the Fed and the Ukrainian war. You guys know I'm definitely a big fan of Jamie Dimon. He said that we were going to have to go very, very sharp last year. Basically, every time Jamie makes a comment, it's pretty much right. If he is using comments now like an economic hurricane, and Elon at the same time, who, again, I wouldn't say that Elon is probably the most he's not the Warren Buffett of the market. Like, he is not a trader, but he does have the power to move markets around, and he definitely has a following. You have somebody that does have the credentials that's saying we're in for an economic hurricane, and then you have Elon saying that's it, you need to cut 10% in tech, and we already know that tech has been getting slaughtered.
I'm
We're seeing
laughing.
inventories, another thing. So
I'm laughing because the CEO of Bank of America had a response to Jamie Dimon. I don't know if you caught it. He said, brace for hurricane. He's like, yeah, well, I'm in South Carolina. We get hurricanes every year.
Yeah, we get them all the
and
time.
And then he went on he spoke about all the positive things that the economy's got going for it. So there are differing opinions. But if you want a good laugh, go out and look at it because these guys do debate each other. And, they've got equal credibility, but it was actually kind of funny and entertaining the way he
yeah. I mean, and understand. Yeah, I mean, they're all different things. I mean, again, if you look at the banks and what their focus is, Jamie is definitely a market trading based bank. JP Morgan is different. Wells Fargo, mortgages, right? Bank of America, just average run of the mill retail banking, right? They're there for banking, not as really investments. So again, take it all with a grain of salt. Again, if I'm a betting man, Jamie Dimon is not a guy that I'm betting against based off of his track record. So, that's kind of it for today. We do have ISM services. And again, ISM services would be one of those ones that would be a little bit more powerful today. But because we had non-farm, that's going to suck up most of the benefit today. And then we do have Bernard speaking today. So she's going to speak in this Community Reinvestment Act of the Urban Institute. I don't know if it's going to be quite a large market mover. We'll see. Like I said, she at this point has been kind of relegated to dealing with kind of the digital currency realm. She's really not saying much on the overall economy and inflation and everything else. So as far as the other headlines today, I think the big things we need to watch out for, both of these actually could potentially offer reversals for the overall market. But the currency market overall is kind of flat. The yen obviously getting, a little bit of weakness out there, as kind of it should. We're seeing a bit of, and it kind of mixed. Little dollar strength, but I wouldn't say it's driving because you see dollar Swiss up 50, see dollar yen up, and you're like, oh, look at this, pound yen 30. But then you see the dollar CAD over here where it's losing ground against the dollar CAD. And that goes right into kind of where we wanted to talk chart-wise today, would be the energies. Crude oil. So crude oil had a very interesting, and again, some of you that know the different chart patterns, there was a double bottom, a little interesting. But yesterday morning, I mean, we got all that news, and we said, hey, listen, OPEC Plus, this is awesome. They're gonna make 650 million barrels a day. This is gonna be great. And then what happened when the U.S. trader came online at 8:00? It said, so what? And then went straight up.
Not enough.
Yeah. I mean, and it did again. We had that level. We mentioned it before that we hit it. We hit it again. We kind of hit it based and everything like that. And then it kind of went across. And then it actually Harry Potter on the other side. It came up and it based in there, blew through, and then used that same old level. So I mean, not one that we would have traded from, but it's just funny how that shows up. And it came up and grabbed the level that we had mentioned before. We had talked about. And even right now, we're starting to drive forward. So I would say right now, today, based off the data we have, they made the adjustment. Now, a lot more people are getting jobs. That's even more demand on the market. So, Elon is cutting people, but again, tech is
it's different. But
think about tech
the economy's adding. The economy is adding.
And remember, Elon has also made the comment: you either come back to work or you leave the company and find somewhere else to work.
Well, that was his way of trying to get 10% of the people to leave.
Right. Yeah. So, and again, it's interesting that somebody like Elon would say that. I mean, again, there are large companies that are trying to incentivize people to come back because of all the other things that need it. Again, I get why they're doing it. Elon, again,
He
the
could be
bright on
pretty
this end, but
inflammatory. Um,
yeah, absolutely. And when you're that rich, I mean, again, he is down. He has lost $42 billion this year. I mean, he's only worth 224 billion, I think, is what they said. But he has lost a lot because of the value of Tesla stock. So again, anyway, I would say oil today. I'd love to say, hey, listen, it's time for this to go way down. You know, all those good things. It's going down to 105 today. Right now, with more people getting hired back, that should be more demand. There's more people on the roads. That technically is more of a bullish sign today. Once we break through and we've hit this level 3 times already, we should have a kind of a room to run. I'm curious today if, again, that 120 is going to be our target. If we have this kind of mess around a little bit and then kind of come over. Now, again, it is a weekend, but again, 120 was a major turning point before. It was a larger time frame level, and it literally tagged it and dropped down very, very strong as well. I'm wondering if we grind up there today based off all the news. So, again, that's kind of what I see in oil. Natural gas took a huge swing down yesterday.
yeah,
Natural gas had a large build in inventory. Again, we don't talk about it, and it's a little bit more difficult to play than oil. It's not as big of a volume-based market. But when the news came out yesterday, this gigantic red candle came down. We were already looking for areas to short here and ended up needing to go a little bit higher. I'll delete it now because it just blew through it. It did have a basing level. We're looking for a break, and again, it did go through. It did Harry Potter off of it, and it is actually sitting there right now. But it had a massive drop back down again. At this point, I would say really kind of trying to find tops and bottom is in natural gas is an interesting scenario. I mean, we have this area up top, right? And again, I'm going to remove this one, even though it's technically at a level right now. I would say top side in kind of a near term, I'd say that $8.98 is probably where we're going to have turns. And then on the downside, we do have some buying down here, but this is close to that 801 level. And we may even have to move it forward a little bit. So right now, because of yesterday's volatility, there's probably not going to be as many natural gas setups. But if oil starts to go higher, I think natural gas probably drives through it as well. And if you are really looking for something, remember, it is a shortened market. If we do have a break above $8.73, this is that kind of parabolic retracement move, right? Huge move
yep.
down because of news. If it comes back up and stabilize, look for a long trade, and that could even be
Yep.
something Sunday. Gold finally is starting to come back down again. I think they looked at those figures and said, "Uh-oh, they're going to have to do something." You may say, "Well, why is gold moving with employment?" Gold and silver are both kind of pushing back down again. The reason why, it goes back to this again. Listen, inflation is continuing to rise. They're not paying as much, and the unemployment rate is not there. But we're hiring a lot more jobs, which means we can absolutely raise. Because remember,
Yep.
if this is not, continuing to move with it, we're losing it. We have to stop inflation because all of this data is only going to continue to get worse.
And with more
So,
people working, more people with money, that's just and so yeah.
yeah,
The Fed actually wants a softening labor market to help it, but the labor market's still very, very strong and
oh,
very, very healthy. Going to force the
Elon and
Fed's
his
hand.
super bad feeling. I mean, this is what they're talking about. It's crazy that Elon and the Fed are on the same page. Like, I have a super bad feeling about this. That's it. Slash jobs, and Powell is like, this is my grand plan coming together. It's kind of
But
the same thing,
companies
right?
are hiring, so the Fed's going to have to do
Yeah,
something. All right, let's jump over
yeah,
to equities and just take a quick look because we
yeah,
are getting. I think we just in the S&P we just had the 50% retracement. I think we just hit it.
yeah. Hold on, I only have one hand, so it's gonna be a little bit slower.
Yeah. By the way, I love the yesterday's birthday crown.
Yeah, this was her birthday
dress.
tiara, so she's obviously we had to take it all off.
Oh,
May
look at
wonder
that. We
why.
literally bounced off of the 50% retracement in the S right now. It touched it
from
and took off.
the overnight. Yeah, this one. Yeah. And I would say overall, I mean, again, when we talked about this, I hadn't even looked at the chart yet, but again, on a fundamental basis, this was all technically negative today. It was a big rally up from yesterday at 10 o'clock in the morning. I mean, literally the 10 to 10:30 time frame yesterday. And again, we mention this all the time that we talk about different reversal times. I mean, the 10 was the low. The buying started at 10:30, and that's where we kind of took off, and now we pulled back again. So is it a 50%? Yeah. Is it an area where people will probably be looking to go long? Most likely, but let's bring this down to a 15-minute. And I think this is important to understand. We always talk about news and how to trade news. We knew that the price was starting to rally up before the news came out, right? From 7:45 to 8, it started to push up again. Looking for the nearest basing level, and again, this is why I use supply and demand, right? There's your area that we were coming off of. If you really wanted to define it, make it really, really small, you could say right there. But there's really the true base on like a 15-minute chart. All it did was it come up, it grabbed those sellers and then continued to push lower. And on a 15-minute, you can see, is there a whole lot of buyers in here? There's a little bit down here, but it's not the best. And actually, that would be a full completion. I would say right now, overall, looking at this, knowing what the news was, I wouldn't really be surprised if we come all the way back down and get into this 40-80. Actually,
Yeah.
we may even get all the way down to the 40-54. Like I said, we're 3% negative on inflation. They've already raised it, month over month basis. Companies are not paying more, and it's kind of like that soft landing would be great, but we had a huge job surge. So that's awesome that people are getting jobs, but they're getting paid less, and it's not following inflation. So the inflation rate. So again, more jobs means, hey, that's positive. So again, it gives the Fed more credibility. So overall, what I would probably say today is see what the opening print looks like, and then again, look for reversals coming in around that 10:30 time frame.
10:30.
Yes, is okay. NQ is obviously getting beat a little bit more. It's actually hit this. I don't know if you guys can see it or not. It's actually hit this little area right here. I'm gonna actually box this off just so you can see it. There we go. This area right here, there is actually some sellers in there. And if you draw kind of a line across to where those sellers are coming in, that's kind of where we're running into. And it's very similar. If you do the same draw, you can draw the top to bottom and say, oh, look at that. It's right around the 50. It is, right?
It's a temporary, this is people right now going, ooh, we're going to get a little bounce. But
Right.
the sentiment is clearly negative.
Yeah. And I understand too, we just had this big push down in price. So as people are trying to react to this, they're like, oh God, oh my God, it's going to go down. That's what it wants to do. They're selling it right here. And again, people like scalp, small 5-minute news scalpers, they're taking their money off. But you can see the 8:30 when it came up, it went high. So people are like, oh my God, it's green. We should go long. And they buy it. And then it goes down. And they're like, never mind. It took us out on a stop loss. And now it's kind of going up again. But you can see there's not a lot of conviction in this. So in the next 15, 20 minutes is when we should see this kind of base turn and kind of roll. So again, not necessarily the best. Tech we know is going to have a lot of problems today, particularly with Elon doing it. And remember too, if you're a competitor to Elon and what he's doing with his companies, if he's starting to pull back because of what he sees market condition wise, if you don't follow suit and he is right, now all of a sudden you get kind of downgraded as far as what you're going to do. And again, this is why Jamie Dimon's made a lot of pointed comments and why he has so much credibility in the market, because he has made very inflammatory comments, but he's been right. There are many, you have people like Carl Icahn that has made some very, very pointed comments and is not always right. Elon is one of these guys that he's been making some pointed comments, and if he's right and his competitors don't start dropping back, the shareholders are going to crucify that board and be like, listen, Elon was saying it, Jamie Dimon was saying it. Why didn't you do anything? Why are profits now being hurt because of your overhiring? So it's kind of one of those things. Those big numbers got to follow. YM also doing the same thing, and again, YM we can see that it came through, drove through, based in, and then took off. It didn't make it quite back as far, but kind of has the same setup. And again, what did it do? It came up and it literally spiked and went right back up to that same level of basing. And again, this is a confirmation touch. So we knew that at this level of basing right here, we knew that there was already buyers. It based and then shot off of. Easy grab on that one. And then Russell, kind of the same thing. I'm surprised that Russell's not getting beat up a little bit more. But Russell actually has a decent level right here. And I actually don't mind that zone at all. But I do think today, overall, probably a bit more of a negative sentiment. Look to see what the opening 30 minutes does. Actually, an hour from 9:30 to 10:30. Look for that drive, and people are like, oh, it's going to be safe. It's safe. And then look for that reversal. Drop down to 15-minute charts and do it. But you guys can see, Tesla, not as bad as it is, but here's Apple. Here's Apple. We talk about kind of where things are opening. A lot of Tesla's news. Tesla's right here. Big gap down. Talk about big tech companies. Apple also gapping lower, and Apple in particular looks like it could fall off that cliff here because it has based in this area. This is 1, 2, 3, and this is hit number 4. This turns bad quick. Apple could really kind of help accelerate the NQ down further. And again, Tesla's in that same area. So Twitter's the only one that's kind of like, what are we doing? But I would expect it to follow suit as well.
Yeah, they're assuming that the deal's not going to go through at this point. All right, it's Friday. With that, any questions for Nadex, please email us customerservice@nadex.com. We are accessible. Brian is also accessible. If you'd like to email Brian, ask him any questions. He's a great coach. support@keeptradingsimple. You can email Brian. I am also accessible. If you want to give me feedback on what we're doing, what you like, what you don't like, what you'd like to see more or less of, we do adapt, and we do really appreciate that feedback. Please email me, todd.rich@nadex.com. And what did we talk about today? Energy is certainly on the move today. Volatility with oil and nat gas, and equities moving around a bit off of those non-farm payroll and unemployment numbers. We'll see what Friday has to have in store for us. Brian and I will be back on Monday. By the way, if you like what we're doing, please give us a like, Facebook or YouTube, wherever you're catching us. We do appreciate that. And we will catch you again on Monday. Until then, good luck in the markets.